Today we're diving into the world of borrowing and exploring your options when you need some extra cash. So if you've ever wondered about the different ways you can borrow money, you've come to the right place. Option number 1, credit cards. Credit cards are a popular choice for many when it comes to borrowing money. They provide you with a revolving credit line that can be accessed through a card, similar to your regular debit card. The beauty of credit cards is that you can use them for various purposes, whether it's everyday purchases or larger purchases. However, it's important to note that credit cards come with a minimum monthly payment, and any money you spend will be subject to interest charges. If you're interested in diving deeper into credit cards and understanding how they work, we have a dedicated video on that covers everything you need to know. Option number 2, personal loans. When it comes to personal loans, they provide you with a specific amount of credit that is deposited directly into your bank account. You then repay the loan on a monthly basis, along with interest, over a fixed period of time. Personal loans are a straightforward option for those who need a lump sum of money for a specific purpose, like buying a car or funding a home improvement project. While personal loans may seem simple at first, there are important factors to consider, such as how your credit score is assessed during the application process. There are 2 common types of personal loans: secured and unsecured. Secured loans require an asset to act as security. Commonly, this is your home equity, or your car. With a secured loan, you might be able to access larger amounts of money at competitive interest rates, as providers feel more confident lending, knowing there is something acting as security. However, the downside of secured loans is that if you repeatedly fail to make payments, then your security could be at risk. Your car could be repossessed, or your home could even be sold to recover the debt. Unsecured loans are more common for smaller amounts of borrowing. With an unsecured loan, no assets are directly tied to the agreement, making it more difficult for companies to recover their money if you defaulted on the repayments. This means companies will be less willing to lend larger amounts, and the interest rates available are generally less favourable than with a secured loan. However, just because no assets are secured to the agreement, that's not to say that you can fail to make payments without repercussions. If you default on your agreement, the company may take you to court, where you could receive a CCJ, be ordered to pay, or even face bailiff action. Option number 3, guarantor loans. Now let's talk about guarantor loans. This borrowing option involves someone else promising to repay the loan on your behalf if you're unable to do so. This person, known as your guarantor, is typically a close friend or family member who is willing to vouch for your reliability. Guarantor loans can be a lifeline for those who may have a lower credit score or limited credit history. If you're considering a guarantor loan, it's crucial to understand the responsibilities and requirements involved. Make sure to have a detailed conversation with your potential guarantor and explain the terms and conditions of the loan carefully. So that's the 3 most common borrowing options in the UK: credit cards, personal loans, and guarantor loans. Each option has its own benefits and considerations, so it's important to weigh them carefully and choose the one that best suits your needs and financial situation. Remember, borrowing money should be a well-informed decision, and responsible borrowing can positively impact your credit score. If you're interested in finding a loan for your circumstances, simply click the button below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK tailored to your circumstance. It's totally free to do, of course, and it won't affect your credit score. So click the button below and fill out the short form to try it out.